Go ahead and share my screen with you. Right. So this is our first time home buyer webinar. We are going to go over a wide variety of information today, going through the process, programs, answering any questions that you may have. One thing to keep in mind is this is not one size fits all, so it's really important to work with a lender who understands your situation, your goals, and is best to help you as you move forward with purchasing your first home. This is also not specific to the state of Florida. So we are nationwide lenders. We can lend in 49 states. So this information will be nationwide details. If you have questions on your specific states or requirements, or maybe down payment assistance programs that are local to your area, you can reach out to us and we can definitely research and find the best programs for you. So a little bit about me. I am Siri Calamese. I have been in the industry over 10 years. I have done it all from processing, underwriting, closing, disclosing. I have run operations teams. I have built branches, and now I am the branch manager here in Sarasota, Florida. I have a wonderful husband. I have a young baby, and I'm very passionate about helping families accomplish the goal of home ownership. I think it's very important to own a home. So that is something I'm very passionate about. I am also a real estate investor, so I work with home investors as well. If that's ever something you guys are interested in getting into or learning more about, I will be hosting another webinar next month, going over the BRRRR method and how to get into investing in real estate. So home ownership has a lot of layers to it, but I think the most important one is understanding your goal. So if your goal is to purchase your first home, knowing it's not your forever home, maybe your intention is to use that property as an investment down the line, or perhaps you're interested in building your dream home. That's absolutely an option. Home ownership is a tool for stability and long-term investment. Most of the time, the programs we talk about are 30-year fixed mortgages. So it is an extended period of time where you have the opportunity to build a lot of equity. One of the most important things is getting your finances ready. So understanding your credit score, your debt to income ratios, down payment requirements. This is going to be critical as you start the process. And working with a lender like myself will allow you to have a full picture and full understanding of your situation. So when we look at your loan application, one of the big ticket items is your credit score. And your credit score can impact your mortgage rate, your type of approval, your program. And generally speaking, the higher your credit score, the better your interest rate. Your credit score is pulled specifically on a mortgage algorithm. So a lot of times people will have Credit Karma or other credit agencies that give them an updated score monthly. And you'll see that there's a variance from what Credit Karma, for example, presents versus what I might pull on an actual credit report. So that is because the mortgage algorithm pulls from the most strict algorithm and gives us a very detailed report. It's very different than if you were car shopping or getting a new credit card or what you see online. Another important factor is your DTI, your debt to income ratio, and this is a percentage of comparing what you have coming in, your income, versus what you have going out, what your obligations are. So this is important because each program has a requirement on the max your debt to income ratio can be. So that's something that we look at when we find the best product and program for you. Another important item to think about is your down payment. And I think that oftentimes this gets to be the point where people get really stressed and throw in the towel. But the reality is that there are programs that can work with you if you're a first time home buyer, where you maybe just put 3% down or 3.5%. There's also down payment assistance, and that can help cover your down payment and closing costs. And right now, with where the market's at, we're seeing a lot of buyers still being able to get seller concessions. So while they might have a little bit of money to put towards the down payment, they may not be able to cover closing costs. The seller concession can help offset that expense. So now let's look at different loan types and programs. Again, this is not one size fits all, so we want to just keep in mind that, for example, with USDA, generally a credit score of 640 is required, but just because you have the 640 does not mean you're automatically going to qualify. So that's something to keep in mind as you go through the process. When you do an application, it comes over to us and we look at all the programs that are going to be the best fit for you. And this is where we plug you into potentially a conventional loan or an FHA loan and go from there. So conventional loans are not backed by the government. These are backed by Fannie and Freddie. You'll hear those names often. And generally they require a higher credit score. For first-time home buyers, you can get away with 3% down, but you do have mortgage insurance. If you put 20% down, you do not have mortgage insurance. The rates will vary based off of your credit score, how much you're putting down, the property type, if it's a single family home versus a condo versus a manufactured home. So that will definitely impact you. And there are down payment assistance programs available. There are federal programs, there are state programs. Depending on the state you're in, like here in Florida, we have Hometown Heroes. That's a big one that is often opened up specifically for heroes like firefighters, veterans, nurses, medical professionals, and then they go on and they actually open it up to everybody. So that's very specific to Florida, but there are nationwide programs that could potentially work for you as well. With FHA, these are government-backed loans. So generally they have lower down payment requirements like 3.5%. And this allows you to have a little bit higher debt to income ratio on FHA. The seller can also contribute up to 6% of closing costs. The seller can also contribute closing costs on conventional loans, but there are different requirements based off of how much you as the buyer are putting down. And there is down payment assistance as well available for FHA loans. Then we have VA loans, and these are also government-backed loans. They are great options for anyone who has served in the military, who has eligibility. One of the big benefits to VA is that there is a 0 down payment requirement. You get a competitive interest rate, and you do not have any mortgage insurance. So that's a really big ticket item, because on any other program, if you're not putting 20% down, you will have mortgage insurance. There's also down payment assistance that can be a piggyback to your main VA loan, and that can cover closing costs if needed. Or you can also work to get a seller concession to offset that expense. Additionally, we have USDA loans. This is also a government-backed loan. And this is very specific because it is going to qualify based off of where the home is located. So the home has to be in a rural area, and your lender or your real estate agent can look up the address and pinpoint exactly what homes are USDA eligible. So in addition to the house being eligible, the buyer also has to be eligible and qualified. And the general credit score for that is 640. There are also other down payment assistance programs that are available if you need help covering closing costs. There are second piggyback loans that can go in hand with that loan. All right, then we have I-10 loans. This is great for those borrowers who do not have a social security number. The down payment is a little bit higher, but we can definitely still proceed with purchasing a home if you do have an I-10. And I know that there's a lot of anxiety around the new administration and some of the changes that are going to be coming. If you are I-10 and let's say your spouse does not have paperwork, doesn't have an ITIN or a social, but is still going to be present on the deed, that is totally fine. I want to make it very clear that we do not report or sell any information to any providers. So anything that you tell us is confidential. It stays within our company. There is no risk to potentially outing yourself or your spouse by having those conversations with us. It just is important to let us know so that we can prepare the paperwork in a specific way. We also have construction loans. So these are great if you want to build your first home or build your dream home, whatever that looks like. We can do 5% down and also 3.5% down on FHA loans. And we do have a rehab program as well. So if your intention is to build from the ground up, that's going to be a construction loan. But if you want to buy an older home that's maybe in distress, we have rehab products for that as well. We also have a bank statement loan, a 1099 program. So these are going to be great for those folks who are self-employed, who are probably not claiming as much income on their tax return. So bank statement loans is where we would gather 12 to 24 months of bank statements, whether that's personal or business. And we would come up with an average of the income deposited into that account as your qualifying income. 1099s are great because if you have 1 or 2 years of your 1099, we can use just the 1099 and not look at your tax returns and what you've written off, but use that 1099 as the qualifying income. And we also have a K1 product as well. So if you receive a K1, but you don't want to show all your taxes, that's not a problem. We have that program additionally. We also have asset depletion. So this is unique for those people who perhaps don't have steady income coming in every month, but they do have a lump sum that they can access. So there are stipulations to this depending on where the funds came from, how long you've had it. Let's say you won the lottery and now you have $10 million. We would document that a specific way. Same goes for inheritance, if we're going to use that as a depletion. There's a calculation that we go through to determine the qualifying income based off of the total accessible balance. And we also look at any tax implications that could come from that. So once you've done your application, we have a conversation and we look and see what is the best program for you. And let's say we have the discussion, you have 3.5% down, maybe you have some student loans, a car payment, so we decide that FHA is going to be the route for you. We're going to have a discussion of how much you can really qualify for, where you're comfortable at, what that payment looks like, and we're going to look at everything big picture. So we are going to include principal and interest, taxes, and homeowners insurance. And then if you have HOA dues or if you're looking at homes that may have HOA dues, we include that as well in your total overall payment. So then you get your pre-approval letter and you go forward, you start shopping with your real estate agent. And when you are looking at homes, you are always welcome to send us the address, give us the details, and we can send you a payment breakdown, what the cost to close would look like, all of that. And when you find the right property, your agent will draft a purchase agreement. And on that purchase agreement, you are going to detail everything from closing date, earnest money deposit. Your earnest money is what secures the home. It's having a little bit of skin in the game. So the seller is more inclined to agree to the terms. This can be anywhere from 1 to 3% of the purchase price usually. So your agent will draft that for everyone and both parties will sign off on it. When your agent presents that offer, your lender, if I am your lender or my team is the lender for you, we will directly reach out to the listing agent. Not everyone does this, but it does help us further secure that contract, right? We want to tell the listing agent that you as a buyer are well qualified. We've already looked at your pay stubs, your W-2s, tax returns, anything that is pertinent information for us to qualify you. We have done our due diligence and you're ready to go. You're gonna make it to the closing table. So you get your contract fully executed, you're officially under contract, super exciting. This is when the work really begins and you start to have a home inspection and an appraisal take place. So the home inspection is generally guided by your real estate agent. They usually have someone who they work with. And that person will come out to the house and they will inspect the home and they're gonna look at everything from the piping, the roof, do the toilets flush correctly? Are there any leaks? Whole 9 yards. They'll inspect the water heater, everything. Then from there, assuming everything looks good, you guys continue forward. We have an appraisal that gets ordered, and the appraisal specifically goes over the value of the home. So this is where your lender orders through a third-party provider, and the appraiser will contact the agent to get access to the home. And they will take photos of the interior of the home, photos of the exterior. They're not looking for material defects. They're looking at the quality of the home. How many bedrooms, how many bathrooms. And then they're going to search for comparables in the area that have recently sold. And they're going to come up with a valuation. And ideally, you want that home to appraise at or above your purchase price. So if your appraisal comes in low, let's say it comes in $5,000 lower than what you agreed to purchase the home for. Generally, you have a couple options. You can either go back and renegotiate with the seller. You can do a dispute of value, which is where the agents provide additional comps that support the original purchase price. And we go back to the appraiser and say, hey, based off this information, we feel the value should be the original purchase price. You can also choose to potentially walk away if that's a big determining factor for you in the process. Or you could also come up with the additional funds. So when you are taking a loan on mortgage, the lender will only lend on the appraised value. So if the home is only worth $200,000, that is what we will lend on. We will not go higher than that. You can't wrap in the gap into your mortgage. So once all of this is complete, you've done your inspections, your appraisal, the title work has come back, underwriting's reviewed everything, you've received your clear to close, then you get to go to the closing table. And this is where you get your keys generally, and you will sign all your paperwork. You need to make sure you come to closing with a valid photo ID. And the title company will of course guide you through that, but generally your license will work. You just want to make sure it's valid. If it's expired, it will not work. You're going to sign all your paperwork. Previous to this, you will likely have done a final walkthrough, or perhaps your agent will do it on your behalf. Just to make sure the house is still in good standing, nothing crazy has happened. There's not been a leak from the dishwasher that all of a sudden impacts the quality of the home. You do that right before closing, before you take ownership. Sign your paperwork, send your wire, you owe funds at closing, and then you get your keys, which is the best part. So once you've closed, there are a couple things to really make note of. It is of course important to make your mortgage on time, maintain those payments, review your escrow statements, review your tax statements. You will get your interest tax forms that you will then file with your tax returns. You do have an interest deduction, which is good as a homeowner. That's one of the benefits. You want to make sure that you file your homestead if that's required in your state based off of the time when you close versus when homestead is issued. So that's something that your agent and your lender will help guide you through. But you want to make note of that because filing for homestead gets you a tax break. Additionally, as your lender, we make sure that we keep on your loan and we do an annual mortgage review. We walk you through everything annually just to make sure there's no gaps, you're not missing any opportunities. And if the market has shifted, we'll tell you when it makes sense to potentially take advantage of a refi. And that's where you can do a rate and term And basically, if your interest rate, let's say you close and your note rate is 7, then you have the opportunity to potentially drop down to wherever the market is. Let's say it drops to 5, you lock in at that 5 and you do a rate and term refinance. There are also cash out refis. So if you have some equity in the home and you want to pull money out to potentially reinvest in another property or put into something else, maybe you have some credit card that you need to pay off, you can pull money out in a cash out refi, and your lender can walk you through that and what that looks like and what the terms are as well. If you guys have any questions, feel free to drop them in the chat. Myself and my team are always happy to help. Being here in Florida, we have a wide variety of buyers, from first-time home buyers, investors, people looking at multi-family homes. And we are very blessed because we do have a Spanish team. And if you have a desire to do an application in Spanish or have your disclosures in Spanish, we can also accommodate that. Are there any questions? Chloe, do you
None
have
on my side. Thank you, Siri.
You're welcome. Chloe, do you have any questions? Okay, if there's no questions, I'll go ahead and end our meeting. But of course, if there is anything that comes up, please don't hesitate, reach out to myself and my team. You can find us on social media, on Instagram, on Facebook. My handle and tagline is just my name. So anything you need, feel free. You are welcome to call, text, DM, and I look forward to hearing from all of you soon. Have a great day.